NVIDIA released their first quarter financials last night. They beat earnings by 19% and they beat revenue by 10%. The stock is up almost 25% on the morning of the 25th. And they're getting closer to a 1 trillion market cap. They've never hit a 1 trillion market cap before. The stock is at its highest point ever. I'm going to take you through their press release page by page so we can understand everything. NVIDIA announces financial results for first quarter 2024. Their first quarter is from February 1st to April 30th. Their fiscal year ends 1/31. Quarterly revenue of $7.19 billion, up 19% from the previous quarter. Record data center revenue of $4.28 billion. Their outlook for the second quarter is $11 billion. And I think that's a big reason the stock went up, because of their outlook. Their revenue is down 13% from the same quarter last year. GAAP earnings per diluted share is 82 cents, up 28 cents from a year ago, and up 44 cents from the prior quarter. Non-GAAP EPS is 109, down 20% from a year ago, up 24% from the prior quarter. The company is going through two big transitions, accelerated computing and generative AI. They say $1 trillion of installed global data infrastructure will transition from general purpose to accelerated computing, as companies race to apply generative AI into every product, service, and business process. They paid out dividends of $99 million, which is a really small percentage of their market cap. They plan to pay their next dividend of 4 cents in June 2023. So you can see here in the current quarter, revenue of $7.2 billion. That's up a lot from last quarter of $6.1 billion, but it's down a bit from the prior quarter last year of $8.3 billion. Last year in the first quarter of 2023, gross margins of 65.5%. That's down to 64.6%. They do have lower operating expenses compared to last year, a lot lower than last year, and lower than last quarter. So they have higher operating income, $2.14 billion compared to $1.9 billion. Net income is also higher from $1.6 billion to $2 billion. So earnings per share are 82 cents, up from 64 cents. That's an increase of 28% year over year, up 44% quarter over quarter. When you look at non-GAAP is stripping out things like stock-based compensation. Their gross margin is 66.8% currently. Last year it was a little higher at 67.1%. But they're lower this quarter in non-GAAP from $4 billion to $3.1 billion. So they paid a lot in stock-based compensation this current quarter. Net income is also lower from $3.4 billion to $2.7 billion, down 21%. That gives them an EPS of 109 compared to 136, down 20%. Here's their outlook for second quarter 2024. Revenue of $11 billion, GAAP gross margin 69%, GAAP operating expenses $2.7 billion, and they expect to pay a 14% effective tax rate. Here are some highlights of their successes in each area. Data center, first quarter revenue was a record $4.28 billion, up 14% from a year ago, up 18% from the prior quarter. They launched 4 inference platforms, and that combines the company's full stack inference software with the latest Ada, Hopper, and Grace Hopper processors. Now Google Cloud is the first cloud provider offering NVIDIA's generative AI applications. They introduced AI Foundations. They unveiled the NVIDIA software library. They expanded their partnerships with Amazon Web Services, Google Cloud, Microsoft Azure, and Oracle Cloud Infrastructure. Those are big companies to have on their side. They partnered with ServiceNow to build generative AI across enterprise IT. They announced a collaboration with Medtronic to build an AI platform for medical devices. They joined Dell Technologies for Project Helix. They're integrating NVIDIA AI enterprise software into Microsoft Azure. In the gaming area, first quarter revenue of $2.2 billion, down 38% from a year ago, up 22% from the prior quarter. They announced a GeForce RTX 4060 family. They launched the GeForce RTX 4070 GPU. They added 36 DLSS gaming titles. That stands for Deep Learning Super Sampling. That brings their total games and apps up to 300. If you play Cyberpunk 2077, you might know they added path tracing. They expanded GeForce Now's game titles to more than 1,600, and that includes the first Microsoft Xbox game, Gears 5. In professional visualization, first quarter revenue $295 million, down 53% from a year ago, up 31% from the prior quarter. They announced NVIDIA Omniverse Cloud. They expanded their collaboration with Microsoft to connect Microsoft 365 applications with Omniverse. They announced 6 new NVIDIA RTX GPUs for mobile and desktop workstations based on the Ada architecture. In automotive, their first quarter revenue was a record $296 million, up 114% from a year ago, up 1% from the previous quarter. Their automotive design pipeline has grown to $14 billion over the next 6 years. That's a big number considering they only had $296 million of revenue. The world's leading EV maker, BYD, will extend its use of NVIDIA Drive Orin across new models. That's another big win. Let's go through their income statement. They compare this most recent quarter to the same quarter in 2022. Revenue is down from $8.3 billion to $7.2 billion. Cost of revenue is down from $2.9 billion to $2.5 billion. Cost of revenue is all the expenses directly related to generating the revenue. This includes all the costs to make their products. The cost of labor, cost of materials, the rent for the warehouse. Their gross profit is $4.6 billion, down from $5.4 billion. They always spend a lot of money in R&D, research and development, $1.9 billion. That's up from $1.6 billion. R&D is the process where a company obtains new knowledge to make new products or improve existing ones. The costs include payroll, materials. It could also include depreciation and amortization. Selling, general, and administrative expenses is up a little bit from last year at $633 million. These are all the costs not directly tied to making the product. You might find the salary of IT, marketing, HR in this category. Acquisition termination costs last year was $1.4 billion. They don't have any this year. So that's why their total operating expenses are down, because of this large $1.4 billion. They have $2.5 billion of operating expenses. Operating income of $2.1 billion, up from $1.9 billion. They received $150 million of interest on their investments. They paid $66 million of interest on their debt, similar to last year. They had a $15 million loss in other. They had $69 million in other income. Income before taxes, $2.2 billion. $166 million of taxes, so their net income is $2 billion, up from $1.6 billion last year. But they did better last year, because if you strip out the acquisition termination cost, they did a lot better. Their EPS is 83 cents, up from 65 cents. It looks like they're buying back stock. They had 2.5 billion shares outstanding last year. Now they have 2.47 billion. Let's look at their balance sheet. The balance sheet lists the assets, liabilities, and equity. Their cash went up from $13 billion to $15 billion. Accounts receivables is how much money other companies owe them. That's $4.1 billion, up from $3.8 billion. Inventory is down from $5.2 billion to $4.6 billion. And prepaid expenses up a little bit to $872 million. A prepaid expense is when a company makes an advance payment for a product or service they're going to receive in the future. So they can't book the expense until they actually receive the product. Once they receive the product, they'll remove the expense from the balance sheet and book it onto the income statement. Total current assets are $25 billion, up from $23 billion. Current assets are assets that can be liquidated into cash within 12 months. Non-current assets are assets that can be liquidated into cash beyond 12 months. They have $3.7 billion of property and equipment. That's down a little from last year. Their factories where they manufacture things, that's part of property and equipment. Operating lease assets, this means they lease assets that are owned by someone else, $1.1 billion. They have $4.4 billion of goodwill. Goodwill is the premium you pay when you acquire another company. Intangible assets of $1.5 billion. This can include copyrights or trademarks. Deferred income tax assets, 4.6 billion. They may have gotten this asset from overpaying taxes in the past, so this will help reduce their taxable income in the future. Other of 4.2 billion. Total assets is 44 billion, up from 41 billion. Let's go through their liabilities. Current liabilities are debts the company owes within 12 months. Accounts payable of 1.1 billion. This is what they owe companies for borrowing on credit. Accrued liabilities, 4.9 billion. And accrued liability is when a company has incurred an expense but hasn't paid it yet. And they have 1.3 billion of short-term debt. So their current liabilities are up a little from last year. It's currently 7.3 billion. They have 10 billion of long-term debt, 939 million of long-term operating lease liabilities, and 2 billion of other. 20 billion of total liabilities, and they have 24.5 billion of equity, 22 billion last year. So liabilities and equity is 44.5 billion, which equals assets. You could see here 44.5 billion total assets. Now let's look at the statement of cash flows. The first section is the operating cash flows. And the purpose of operating cash flows is to convert net income to cash. And the way you do that, you start with your net income of 2 billion, then you add or subtract the non-cash items on the income statement. We add back 735 million of stock-based compensation. We add back 384 million of depreciation. They had a gain of 1.1 billion in deferred income taxes. We minus that out here. Then we have to adjust for changes in working capital. It looks like they extended some credit. They had a cash outflow of 252 million in accounts receivables. It looks like they bought inventory in the past, maybe last year, 560 million, and they used that inventory. So when a company uses the inventory, when they take it off the balance sheet and put it onto the income statement, it's a cash inflow in this accounting period. They had a cash outflow of 215 million on prepaid expenses. They paid back 11 million of accounts payable. A cash inflow of 700 million in accrued liabilities. A cash inflow of 100 million in other. Even though they reported an accounting profit of 2 billion, they actually generated 2.9 billion of cash flow. The next section on the statement of cash flows is the investing section. They bought 2.5 billion of marketable securities. These are probably bonds or treasury notes. They purchased 2.8 billion of marketable securities. They purchased 250 million of property and equipment. They spent 83 million on acquisitions, and they spent 220 million on investments. So in their investing section, they had a cash outflow of 840 million. In their financing section, the third section, they had a cash inflow of 246 million. This is from employees purchasing stock. They paid 500 million on taxes on restricted stock units. They paid out 99 million of dividends. And they paid back $20 million of principal on property and equipment. They didn't buy back any stock. Last year, they bought back 2 billion of common stock. That's why last year they had a cash outflow of 2.5 billion in their financing section. This year, it's a cash outflow of 380 million. So when you add up the CFO, CFI, and CFF sections, it's a cash inflow of 1.7 billion. In the beginning of the accounting period, they had 3.4 billion of cash. They added 1.7 billion. At the end of the accounting period, they have 5.079 billion of cash. Here's another report they have in their website, revenue by quarter. This is the last 8 quarters. And you can see they have their most revenue in data centers, 4.3 billion. It never hit 4 billion before. Gaming, 2.2 billion. The peak was in Q1 2023 at 3.6 billion. Professional visualization of only 300 million. The peak was 640 million in Q4 2022. Auto, 296 million. That's the highest ever. OEM, original equipment manufacturer, and other, 77 million. The highest was 409 million 2 years ago. So total revenue of 7.2 billion. Their highest was Q1 2023, 8.3 billion. So that's the end of the video. Let me know what you think. Comment, subscribe. Talk to you soon.